The de-dollarization story is really beginning to go mainstream and get some attention now, with the latest to sound the alarm on this topic, none other than former President Donald Trump. And that is our headline story today, this time from Fox Business. Donald Trump warning in an interview with Larry Kudlow that the US dollar is losing its dominance, and in his words, our country is going to hell. And in today's video, we're going to get into some of the details about what former President Donald Trump believes is threatening the status of the US dollar. And we'll also go over some of his proposed solutions and some of the latest de-dollarization updates, because I do agree on this one with the former president that the US dollar is under tremendous pressure, and there are more threats to it now, really, than any time since 1971 when Nixon ended gold convertibility. So one thing that you might want to have if the dollar does lose its reserve status is some hard assets, some gold and silver. I buy mine at sdbullion.com. That's today's video sponsor. You can check them out with the link down in the description below. And also, new customers right now can get gold or silver at spot by visiting sdbullion.com/new. So make sure you check them out. Now, let's get into some of what the former president believes is threatening the US dollar. And I mean, I really do think it's very telling that we're basically hearing from both sides of the aisle now that this is a threat. And we'll get into what I mean in just a moment. But first, let's hear a quote from Trump, who said in this interview, "Our country is going to hell and we're not going to be the big boy. We have power, but it's waning. In fact, it's waning in terms of our currency." And I'm not just talking about the value of our currency. I'm talking about our currency being used throughout the world. And we'll go over some examples of just how many countries around the world are dumping their use of the US dollar here in just a moment. But I do think it's interesting that Trump also points out the magnitude of this crisis when he said that losing the dollar's status as the reserve currency, the global reserve currency, is bigger than losing any war. And I would agree with him that the dollar's status as the world reserve currency is so critical to the US empire and how the global economy operates, how we are able to wage all of these wars. You know, the fact that the rest of the world is willing to buy up all of our debt and we're able to export our inflation. That's how we've been able to afford all of these wars over the past decades. And if we do lose the world reserve currency, that certainly will be a enormous blow to the US economy and the US ability to project power around the world. So another quote from the president here, he said, "We have something that's very powerful, and that's our dollar, but you take a look at what's happening to it now with other countries not using it, and you know China wants to replace it with the yuan. That was unthinkable with us. Unthinkable, would never have happened. Now people are thinking about it." So I'm assuming in that quote that he's referring to his administration. Now, I would say that perhaps, you know, there's just an element of timing here. Maybe he's right. Maybe we wouldn't have seen de-dollarization had, you know, a different administration been in office. That's all speculation. But one of the things that I really do think Trump kind of got wrong in this interview is what he attributes inflation to. So, you know, as much as I agree with his call that the US dollar is at risk, one of the things he says here is inflation was caused, in my opinion, by energy because it's so big. It's like all-encompassing everything. You make donuts in the ovens and the trucks that deliver them, and no matter what you do, it's so much about energy. Now, he's right that energy does kind of touch all areas of the economy. That is a correct assessment. However, I think he's kind of putting the cart before the horse here, because inflation is not caused by rising energy prices. That's reversed. Rising inflation causes energy prices to increase. In fact, it's the massive deficits, the debt monetization, the record low interest rates. Those are the things that cause inflation. But, you know, it's kind of hard for him to acknowledge that, I would imagine, because he did, after all, sign his name to the first round of stimulus checks. And he did a lot to expand deficit spending in Washington. I mean, just looking at things objectively. Now, whether or not he really understands what causes inflation or not, no one knows the inner workings of the man's mind. It may just be politically expedient for him to point that out, or maybe he really believes that. But inflation is caused by an expansion of the money supply and by the Federal Reserve creating all this money. And then the other thing he goes on to say here is that they cut it off. And again, we were drilling much more. We were a bigger force than Russia and Saudi Arabia individually. In a year and a half, we would have been a bigger force than them combined, and we would have made so much money. We would have been paying off debt, and we would have been doing things that nobody's ever seen this country do. So Trump's solution to the inflation problem and ostensibly to the de-dollarization problem would be to increase energy production domestically. And while, that might be a good idea, I don't think it would fix this problem. A lot of the reason why the globe is de-dollarizing, a lot of it has to do with the weaponization of the dollar, the sanctions. It doesn't have that much to do with the U.S. ability to produce energy. And while it certainly would be a boon for the U.S. economy, I'm sure, to produce and export more energy, I do just want to point out that, when it comes to the de-dollarization thing, it's really more about these other countries, these OPEC and OPEC plus countries like Russia, like Saudi Arabia, selling their oil to non-U.S. countries for the dollar. If you look at this chart from the Energy Information Administration, this is U.S. petroleum imports, total and from OPEC, the Persian Gulf, and Canada. And if you can see the lines there, this kind of, orange color line and the green, those represent our Middle Eastern oil imports. And those are important because, Trump mentions Saudi Arabia and Russia, and certainly OPEC and OPEC Plus are a very important component of the petrodollar system. And that is one of the fundamental underpinnings of the dollar status as the world's reserve currency. All of these countries that want to buy oil from places like Saudi Arabia, that right now they have to use dollars. But you can see U.S. imports from OPEC and the Persian Gulf have really gone down dramatically as U.S. energy production has increased over the past decade. So, they might lose some market share to the U.S. if we produced more energy here domestically, but that would stop nothing. That wouldn't do anything to stop problems like this story. I covered this in a recent live stream that India just made its first crude oil payment to the United Arab Emirates in Indian rupees. It's hard to imagine how the U.S. producing more oil would do anything to avert this form of de-dollarization. I've got some folks in the chat here saying the dollar will last decades. And I agree with you that the dollar will be around in some form or another for decades and, possibly longer than that. But will the petrodollar system remain in effect? Will the dollar remain the predominant world reserve currency? That's up in the air, and it's not really looking good, as the former president has pointed out here. So while I don't necessarily agree with his proposed solutions, I do believe that he is sounding the alarm at a apropos time. We're having countries around the world dumping the U.S. dollar. This was India purchasing 1 million barrels of UAE crude oil with the Indian rupee. And so now, the UAE can take those rupees. It imports things from India. It can pay them with rupees rather than dollar. And one of the stated reasons of this move was to save money by eliminating the need for the conversion of the currencies in the trade into dollars. India's efforts to cut transaction costs by eliminating dollar conversions. Also, very likely, it's an attempt to just reduce their dependence on the U.S. dollar and subject themselves less to the whim of the Federal Reserve. And those are really the problems here, that the world is not just dumping the dollar, but more that they're just looking to use their own currencies. They are dumping the dollar in the process, but they're going to be looking to use local currencies more and more. And we've seen quite a bit of this. Trump mentioned specifically the Chinese yuan, and while the yuan in and of itself is not really a threat to the U.S. dollar, people are often, quick to point that out, that the yuan makes up a very small portion of total global reserves. It's not so much that the yuan by itself is a problem, but it's just this reversion to local currencies for bilateral trade. This is a story that we got months ago from February, how Iraq had converted its bilateral trade with China, who happened to be their biggest trading partner, to Chinese yuan. So again, they don't need dollars to buy manufactured goods from China. They can use yuan. And China purchases a lot of Iraqi oil. However, specifically oil was actually left out of this agreement, which I think is pretty interesting. That's why that story with the UAE was so important. India and the UAE conducting non-dollar transactions for crude oil. Iraq actually excluded oil from their yuan trade agreements. I guess they don't want to get invaded again. Although, no one's invading India and the UAE, and they just dumped the dollar for the oil trade. So, things are a little different than they were 20 years ago or 30 years ago when we had, Desert Storm and then the Iraq War. And also the, Muammar Gaddafi getting deposed. He was another one who was looking to dump the dollar for his oil trade. But now you're able to get away with this. And that's a pretty clear message, I think, that India and the UAE have sent to countries around the world that now you can use non-dollar currencies and, you won't get a regime change as a result. Someone in the chat says, man, you're sharp. Well, I don't know about that. I mean, to me, I think that the dollar's limited lifespan, I mean, I appreciate you saying that, but I think that the dollar's limited lifespan is pretty clear. There's a lot of normalcy bias at work here, though. Normalcy bias being that, if you haven't seen something happen, you don't anticipate that it will happen. And in living memory, I mean, the dollar has always been the world reserve currency. It's been the world reserve currency ever since the Second World War. Got the Bretton Woods Agreement. For a while there, you could convert your dollars into gold. 1971, that ended, and we've had a purely fiat dollar standard. But the thing that props that up is the petrodollar. That's the arrangement that was worked out between King Faisal of Saudi Arabia and Richard Nixon back in 1974. OPEC sells all of their oil for dollars. Well, now apparently that system is at risk. But Saudi Arabia is going to be the real linchpin of this situation. This is really going to determine how long the dollar has as the world's reserve currency. And I do think it's very telling. Like I mentioned earlier, both sides of the political aisle in the U.S. are now acknowledging that the petrodollar and the U.S. dollar status as the world reserve currency is at risk. I mean, Donald Trump explicitly warning of that in this recent interview, but the Biden administration has also sort of implicitly told us that he understands, or that they understand, that this is a risk. This Wall Street Journal piece, we've talked about this a couple times, but this deal that has been proposed between the Saudis, the Israelis, and the U.S., part of this is that, my Wall Street Journal paywall. Okay, I won't scroll to the text that explains this, but the negotiators negotiating this deal have pointed out that part of what they'll be requesting from the Saudis is that they denominate their oil sales in dollars and not Chinese yuan. That is part of this deal. Maybe this deal will come to pass. Maybe it won't. I'm pretty skeptical of it. It's certainly very early in the process. The other aspect of this is that there have to be some concessions from Israel on Palestine. The U.S. will be giving the Saudis new ironclad security guarantees, and they will also be helping them with a civilian domestic nuclear program. So, the U.S. is putting a lot on the line here. They're dangling a pretty big carrot for the Saudis, but will the Saudis accept it? I mean, it's hard to say. I think that following the U.S. withdrawal from Afghanistan, the Saudis were not particularly impressed with our ability to project force in their neck of the woods. They might be looking for some other strategic partners. They have signed many strategic partnerships with China over the past year. Several of those were following the Gulf China conference that was held in the Saudi capital of Riyadh back in December. And if you recall, that was the conference at which Xi Jinping was petitioning all of these Gulf countries, including the UAE, by the way, to price their oil and gas sales in yuan. We did see UAE gas purchased earlier this year by the Chinese via French company Total Energy. They sold 65,000 tons of UAE natural gas to China, and the deal was brokered and denominated in Chinese yuan. So, incidents like this are picking up, but the real linchpin here is Saudi Arabia, and that is why the U.S. is willing to offer them things like a domestic nuclear program. Part of this is that we're trying to counter Iran in the region, and we want to develop the Saudi-U.S. strategic partnership in order to do that, but there's a very good likelihood that the Saudis may decide that the partnership with the U.S. is no longer in their best interest. Excuse me. And this may happen very soon we've got the BRICS nations meeting in South Africa. What, next week now, right? August 22nd, this BRICS 2023 conference kicks off, and on the agenda is BRICS expansion. Some 40 countries have expressed an interest in joining, and Saudi Arabia is on that list. They have applied, they have expressed an interest in joining, and we know that the BRICS nations, there have been all these rumors of a potential alternative currency being created, maybe one backed by commodities or gold. That seems to be, based on what we've heard from a number of officials, including a South African ambassador who said that was off the table. Maybe that won't be happening, but one thing we have consistently heard from all of the participants of this BRICS conference is that a transition to local currencies rather than some, basket of currencies or some specific alternative currency, but just transitioning to currencies like the Indian rupee, for example, or the ruble or the yuan, that will absolutely be on the agenda. That is something they are going to emphasize. And I mean, we're already seeing this kick off before the meeting. It's not an accident that all of this is occurring right as we lead into this BRICS conference. This deal kind of came out of the blue, right? I got to turn my auto rotate off on this thing. Sorry about that, folks. It's a live stream. So, yeah, this deal kind of came out of nowhere, and I really don't think it's an accident that it was kind of being proposed right as we head into this BRICS conference, where they tell us that one of their primary objectives is going to be to do trade in other currencies. And, Saudi Arabia, we know that this is something they're open to because their finance minister, Ed Davos, in January of this year told Bloomberg that they were open to talks on trade in currencies beside the dollar. I mean, this is in their own words. And so, the Saudis, they're trying to find out who the best partner is for them. The Saudi Aramco CEO 2 years ago did pledge 50 years of energy security to China. He told the Chinese that providing their energy needs would be Saudi Aramco, the giant Saudi state-owned oil company. It would be their highest priority for not the next 5 years, but the next 50 years. And so I think it's pretty clear where the tides are turning here, and that the US dollar is in a significant amount of risk. The reserve status could very well go away fairly quickly here. And, the end of the petrodollar could be the black swan event that issues that in. Now, if that deal works out, sure, the US dollar could stick around for considerable amount of time. Something like the US economy doesn't, completely change overnight. But for one thing, they might not go for that deal. If that's the case, it's going to be a huge problem for the dollar. And even if they do, the things that Trump is proposing here, increasing domestic energy production, that's not going to solve the problem with the sanctions. It's not going to solve the problem with inflation, because really inflation is a result of the massive amounts of government deficits and the monetization of all of that debt. And that's not going anywhere. I mean, I don't see Trump saying he's going to impose massive austerity on the population and balance the budget. And of course, he's not really a true conservative in a fiscal sense. He's more of a populist, and that's not a criticism or a agreement with him. That's just a fact. He was signing his name to stimulus checks. And so, this is not the problem that is likely to be resolved at the ballot box anytime soon. I suppose that, if we begin seeing inflation run out of control in a really bad way, if we get like Zimbabwe or Venezuela level inflation, maybe then the U.S. electorate would be more open to austerity. But I just don't think that that's going to happen. Yeah, nothing can save the U.S. economy. It needs a reform, Warboss is saying in the chat. And absolutely, a massive reform, pumping some more oil out of the ground isn't going to do it. I mean, it might stave off the inflation for a bit because, if you produce a bunch of oil and gas, maybe you could drive energy prices down. That can bring down prices. But the problem is that there is all of these massive deficits and a huge expansion of the U.S. money supply. Although, they're bringing that down a little bit right now with QT, but we're starting to see the cracks show in the U.S. economy. We're starting to see banks getting downgraded. Fitch just downgraded or mentioned that they may need to downgrade some major banks, including J.P. Morgan. The interest cost on the U.S. debt is soaring. The Federal Reserve's program to rein in inflation by hiking rates is certainly bringing the US economy a lot of pain, but it's not really doing much to fight inflation. You know, we just saw the headline CPI tick back up to 3.2% after the 3% low of June, and core CPI remains at 4.7% year over year. That is very high. You know, if you go look at an inflation calculator, put in $100,000 for 2020, compare that to today, you need $118,000 to equal that purchasing power. So, you know, this inflation is cumulative. It's still a real problem. And, you know, producing gas isn't going to solve that problem. We have nearly a $2 trillion deficit this year here in the US. It's a massive increase over last year. And these deficits are just going to keep getting bigger because US is headed towards a recession. Tax revenues are going to decline as a result of that. And the interest on the national debt, you know, the annual interest on the national debt is approaching $1 trillion. We have, what, $32.8 trillion now, I think, in total debt. What's the, you know, average yield on a U.S. Treasury? It's approaching 5%. Now, a lot of this debt is older and it has a lower interest rate, but if you were to roll it over, and every month more of it does get rolled over to a higher interest rate, if you were to roll it over to the current interest rate, I mean, you'd be well over $1 trillion. The interest on the debt is soon going to be the biggest item on the federal budget. It's going to exceed Social Security. It's going to exceed Medicare. It's going to exceed defense. We're just going to be paying huge amounts of interest. So, you know, any politician who tells you they can fix this without cutting spending is, I'm not going to say they're, you know, telling an untruth. It may just be that they don't, you know, understand. Maybe they buy the Keynesian economic plan to just, you know, modern monetary theory, print a bunch of money, and everything will be fine. But the reality is that you can't pay off this level of debt without debasing the currency, unless you really just impose massive austerity, and there's no political will for that. And so we're going to go down the route that many empires do, at least it seems that way, of gradually losing our reserve currency and becoming less relevant in the global economy. Now, I hope that doesn't happen, but you've got, you know, folks in the mainstream now, former President Donald Trump acknowledging that this is a risk. And yeah, you have someone in the chat there saying only if we accept CBDC will we be saved. I don't know. The chat kind of comes in and out. I'm on a mobile device here, but yeah, I mean, you may well see a CBDC implemented. I wouldn't even be surprised if you get Trump in there in the next election if, you know, he supports it. You know, like I said, he's the guy who signed his name to stimulus checks. So I would have, you know, I wouldn't be shocked if he were to get behind a plan like that. And you might see it from either party. Great, you know, guaranteed they'll impose something like that if we get another economic crisis. There will be massive intervention. There may be something like a CBDC unveiled. You know what they say? Never let a good crisis go to waste. That's the way they operate. I don't know what the solutions will be, but I doubt very much that we'll see solutions that will actually work. It seems like they're doubling down on these failed economic policies, and that's why I'm getting into hard assets, folks. You know, that's why I've been stacking metals for a decade plus, because they've been pursuing these policies for some time now, and the writing has been on the wall. But now we're getting kind of to the terminal phase of it, it does seem. We've got the rest of the world dumping the dollar, and there's certainly a lot of attempts being made to maintain the status quo in the form of deals like, you know, offering the Saudis nuclear reactors if they'll just keep accepting dollars for their oil sales. The bait is getting pretty intense. You know, we're willing to offer a lot of concessions to maintain the petrodollar system, but that's because if it falls apart, the dollar is toast. You know, all those dollars around the world that all these countries are holding because they need them to buy oil, they'll all be coming back home. And also, you got to keep in mind the other aspect of the petrodollar system. All of those petrodollar profits, typically they get recycled back into U.S. treasuries. If the petrodollar ends, there aren't going to be any more petrodollar profits. Demand for U.S. treasuries around the world will plummet. Interest rates, yield on the treasuries will skyrocket. And that's when the Fed's going to have to get involved and intervene in some way. Maybe they'll cut rates. Maybe they'll buy up a bunch of treasuries. I don't know. If you watched my interview yesterday with Leor Gantz, he doesn't seem to think that there will be QE because, you know, all eyes are on the Fed now in the inflation fight, and people are beginning to understand that the Fed is behind this. I'm not so sure about that. I think that if we see skyrocketing rates, if we see a financial crisis, that the Fed will come right back into it with more QE. Maybe it won't be QE per se, but it will be QE in everything but its name. Maybe they'll do something like the Bank Term Funding Program. That was the program they started in March of this year in response to the banking collapse, where they were taking all of these low yielding, distressed assets, the low yielding treasuries these banks had on their books as collateral for loans. Maybe they'll do something like that again. I mean, you saw the Fed balance sheet expand when that happened. Maybe it won't be QE, but they'll be intervening in some way. And I expect that it will, in its essence, be more debt monetization. And that's why more inflation is on its way. I mean, 2008, when they started QE, then the U.S. had an enormously smaller amount of debt. The debt to GDP ratio was much lower. Nations around the world were still willing to buy up U.S. treasuries. All of that has changed. We have got a deglobalizing economy that's going to contribute to price inflation. We have got the Fed cranking up rates in its misguided attempt to fight inflation. All they're doing is gutting the economy, and this is not going to end well. And so, when former President Donald Trump warns that the dollar is at risk, I agree with him 100%. He's accurate in his warning. Now, I don't get too political on this channel. I'm not really, a huge fan of the current administration. I think that, Trump as president did some good things. He also did, some very bad things for our economy. And that's just what it is. But whichever party gets elected, gets into the White House in the next election, I don't think it's going to make much impact for the dollar. I mean, I think that the dollar is on a very dangerous trajectory, and without some kind of massive changes in how we are running our economy, it is going to smash right into a brick wall. So leave me a comment down below to let me know what you think. What about Trump's warning? Is it a timely warning? Do you think that any of his proposed solutions will work? I don't know. I'm stacking silver. Let me know what you're doing in the comments down below. Thanks for watching, everybody. Stay safe and happy stacking. Don't forget to like, comment, subscribe, and I'll catch you next time. Smart Silver Stacker, out.